expired. Chair now recognizes the gentleman from Texas, Mr. Green.
Thank you, Mr. Chairman. And also, Mr. Chairman, if I may, I'd like to thank you for the recognition that we showed earlier today to the former president of South Africa, Mr. Nelson Mandela. I regret that some of you have been detained longer than we possibly wanted you to be detained. So it was one of those times when there was a really important event to many of us that was taking place. So thank you for your patience. And to reward you for being so patient, I'm just going to ask one question, and I'll give each person an opportunity to respond. Very simple question. Why, in your opinion, is the 30-year fixed rate mortgage important? Why is it important to your constituents, the people that you serve or represent here today? Mr. Calhoun, I'll start with you, and I do so with the understanding that you do have a constituency, and I'm sure you have an opinion.
Yes, quickly, households do not handle interest rate risk well. As you see in today's market, if you had a variable rate loan, they were down as low as 3% or less, and within a couple-year period, we could be easily looking at rates 5%. That's more than a 50% increase in the borrower's mortgage payment. Most households don't fully understand that, and very few of them have the financial reserve and liquidity to be able to absorb that.
My friend?
I'd say the 30-year fixed effectively provides to a borrower as they're buying insurance on interest rate risk. Instead of paying, let's say, 4.5%, you're paying 4 3/4, and that differential between 4.5 and 4 3/4 is effectively an insurance payment, so that 10 years down the road, your interest rate doesn't go up. But there is a cost to that, and ultimately the capital markets will always provide that service, but of course for that insurance price cost.
My friend, Mr. Stevens.
Congressman, first, not everybody necessarily needs a 30-year fixed rate loan, but for many families, the confidence of knowing that their rate will not go up over time for their shelter is important, but more so as we look forward, it's going to be much more important than in decades past. We've gone from 18% back in 1980 to 3% several weeks ago. On a forward-looking basis, we're going to have rates rising, and so having that protection is going to be a stability factor, not just for the family, but for the economy overall.
Thank you. My friend from the builders, Mr. Howard.
Well, in the interest of time, Mr. Green, I'll associate myself with the remarks of the 3 previous speakers. They hit the nail right on the head.
All right. And we'll move next to my friend, Ms. Shepard.
The quick answer that we have is a system of long-term fixed-rate mortgages financed through the stable securitization helps provide the stability in the U.S. economy on the 30-year mortgage. But in addition to that, I'd like to mention real quick that this is something our membership asks for. They demand or want this product at the very members that we serve. So because we serve them, we go to meet their demand, and we do the 15 years. And it's almost a 50-50 split now.
Thank you. My friend, Mr. Loving.
As well, our customers ask for this product, but not all customers want this product. I think the real issue is the fixed rate. Depending upon whether it be 10 years, 15 years, or 30 years, it is the knowledge of what the payment will be from the day of origination to the day that they pay the loan off in full. So I think the key is the fixed rate component. But again, the 30-year product is something that is asked for by our customers, and is something that allows us as community banks to serve our customers' needs.
Thank you very much, and thank you, Mr. Chairman. I yield back.